Hello, this is Michael Cochran with BentOak Capital sharing a brief market update for March 2025. Be sure to stay tuned through the end for an important disclosure. Markets experienced a pullback in March and into April with tariff concerns at the forefront. While the U.S. economy was already expected to slow from last year's robust 3% growth, disappointing retail sales data for January and February further dampened investor confidence. In response, many have cut GDP forecasts, citing downside risk from the escalating trade tensions. The likelihood of a significant economic slowdown over the next year has risen primarily due to uncertainty and the potential drag from tariffs. These tariffs are creating headwinds for businesses and consumers alike. Companies facing new levies may see profit margins shrink, with some costs passed to consumers in the form of higher prices. While some consumers may accelerate purchases ahead of potential price hikes, others are holding back due to uncertainty. Additionally, falling stock prices, hiring delays, and federal government layoffs have weighed on consumer confidence and business investment. Despite these challenges, the U.S. consumer remains strong. Healthy savings levels, steady income growth, and strong household net worth should continue to support economic momentum. Slower growth is also helping ease inflationary pressures, potentially setting the stage for further interest rate cuts from the Federal Reserve, which will be helpful for keeping borrowing costs low. We may be approaching peak trade uncertainty. Historically, once policy clarity begins to emerge, markets tend to recover. For example, during the 2019 trade war period, the S&P 500 rallied 19% from late August through February of 2020. While such gains may be optimistic in today's environment, a meaningful rebound by year-end remains a reasonable expectation. Tariffs may present near-term challenges, but potential tailwinds such as tax cut extensions and deregulation could follow. Volatility may persist in the near term as markets continue to digest policy developments. While annual returns following a negative first quarter tend to be more muted, we believe the outlook for long-term investors remains promising. We are closely monitoring developments and assessing their potential impacts on your portfolio. Market reactions to policy shifts can be swift, but they often stabilize as clarity does improve. With trade negotiations already underway and a shift in focus expected towards tax reform and lower interest rates, we believe market conditions could improve as the year progresses. This is the time for patience and discipline, and history shows that staying the course often leads to favorable outcomes over time. If you have any questions or would like to discuss how these events may affect your financial plan, please don't hesitate to reach out. We're here to help you stay on track and make informed decisions.